Imagine waking up to see $200 million wiped out in just 15 minutes. Crypto markets bleeding red, Wall Street shaken, and the words trade war echoing across global headlines. This isn't random. It's triggered by Donald Trump's new proposal for massive tariffs on Chinese imports, especially rare earth materials. The shockwave? It's hitting stocks, commodities, and yes, the entire crypto market. But here's the real question. Is this the start of a collapse, or the perfect setup before the next bull run? Let's break it down, from macroeconomics to market psychology, and uncover what smart money is doing right now. You know, one thing I've learned after years in finance is this: real change doesn't make noise. It happens quietly, behind the scenes. Right now, major US institutions are quietly going all in on crypto. Morgan Stanley just lifted restrictions on Bitcoin investments, and BNY Mellon, one of America's oldest banks, is building systems for tokenized deposits and blockchain payments. Think about that for a second. When traditional banks, the same ones that once called crypto a fad, start using it to move real money, that's not speculation anymore. That's validation. It's the same moment we saw when the internet went mainstream. You can fight it, you can learn how to profit from it. So which side are you on? $200 million gone in just 15 minutes. Sounds terrifying, right? But here's what most people miss. Every bull run starts with fear. These crashes aren't the end. They're the reset button. They wash out the gamblers, the overleveraged traders, and leave the market in the hands of real investors. I've seen this story play out again and again. In stocks, in real estate, in crypto. When everyone else panics, the smart money quietly starts buying. So instead of asking, why did this happen? Ask, what opportunity is this creating for me? Because history shows, the biggest fortunes are built when the screens are red, not green. $200 million gone in just 15 minutes. Sounds terrifying, right? But here's what most people miss. Every bull run starts with fear. These crashes aren't the end. They're the reset button. They wash out the gamblers, the overleveraged traders, and leave the market in the hands of real investors. I've seen this story play out again and again. In stocks, in real estate, in crypto. When everyone else panics, the smart money quietly starts buying. So instead of asking, why did this happen? Ask, what opportunity is this creating for me? Because history shows, the biggest fortunes are built when the screens are red, not green. The latest Fed minutes just confirmed what many of us expected. Rate cuts are finally on the horizon. We could see the first one within weeks, with more coming in 2026. Sure, the headlines about government shutdowns and layoffs sound scary, but history tells a different story. Every time the Fed loosens policy after a slowdown, liquidity floods back into the system. And guess where a lot of that money goes? Into risk assets like Bitcoin and Ethereum. It's the classic setup. Short-term fear creating long-term opportunity. If you've been waiting for the next big wave, this could be the moment smart investors have been preparing for. Something huge is happening quietly on Capitol Hill. The Market Structure Clarity Act is gaining momentum with support from both sides of Congress. For years, the crypto industry has been stuck in a gray zone, unsure whether assets like Bitcoin and Ethereum were securities or commodities. That uncertainty kept big institutions on the sidelines. But this bill changes everything. It gives digital assets a clear legal identity. And that means the door finally opens for banks, funds, and corporations to enter the space legally and confidently. Regulation doesn't kill innovation, it legitimizes it. And when Wall Street gets clarity, Main Street gets opportunity. Here's something fascinating from the blockchain itself. Even some Satoshi-era wallets, untouched for over a decade, have started moving coins. At first glance, that might sound bearish. But look closer. Every time those old Bitcoins hit the market, they're bought up almost instantly. That tells us one thing. There's real conviction behind today's buyers. Institutions, long-term investors, and smart retail players are quietly dollar-cost averaging every dip. It's not hype, it's strategy. This isn't a market running on FOMO anymore. It's a market backed by patience, data, and belief that the next big cycle is already building beneath the surface. What we're seeing right now isn't chaos, it's rhythm. Every healthy market breathes in and out, and this Ethereum correction is no different. If you zoom out, These pullbacks look almost identical to those before previous bull runs. Retesting key support levels isn't a sign of weakness, it's a sign of structure. It's the market asking, are you patient enough to hold through the noise? Smart investors don't panic here. They accumulate. Because when history repeats itself, these moments of fear often turn into the best entry points for those thinking long-term, not chasing short-term headlines. More Americans over 40 are realizing they don't need to sit in front of a trading screen all day to build wealth. They're moving toward automated crypto income streams, staking, yield farming, and tokenized savings accounts that work around the clock. These systems generate steady cash flow 24/7, even while you sleep. One of my clients once told me, I stopped trading the noise and started earning from the system. That's the shift, from chasing quick wins to building consistent passive income. It's not gambling anymore, it's smart automation. And in a world where volatility never stops, those who earn automatically are the ones who finally find freedom. The smartest investors I know aren't betting everything on one coin. They're building hybrid portfolios. They blend stable coins for stability, blue-chip cryptos like Bitcoin and Ethereum for growth, and tokenized assets that earn real-world yield from things like real estate or green energy projects. It's the next generation of passive income, safer, smarter, and global. One of my students once said, I finally feel like my money is working for me, not the other way around. That's exactly the goal. Diversification isn't about avoiding risk. It's about designing a system that keeps earning no matter where the market moves. This moment isn't the end of crypto. It's the reset before the next big wave. Every cycle has its shakeout, and this one is no different. The difference is how you respond. While fear dominates the headlines, strong hands are quietly accumulating, preparing for what's next. With rate cuts on the horizon, clearer regulations coming, and adoption spreading worldwide, the foundation for the next bull market is already being built, right beneath our feet. So stay patient, stay educated, and most importantly, keep building assets that earn while you sleep. Because the future doesn't belong to those who panic, it belongs to those who prepare. At the end of the day, every crash, every correction, every headline is just noise. What really matters is how you position yourself for what comes next. The digital economy is evolving faster than ever, and those who learn, adapt, and take action now will be the ones who thrive when the next wave hits. If this video helped you see the bigger picture, hit that like button, share your thoughts in the comments. I read every one of them. And subscribe so you don't miss the strategies that could change your financial future. Remember, wealth isn't built overnight. It's built consistently, one smart decision at a time. Let's grow together. Your journey to financial freedom starts here.